Hi, can
Five,
people hear me?
four.
Hi everyone. Hi Padani,
Hi.
Anton, Jundam.
So
Hi.
now we are
Hello.
already live in YouTube. Yeah. Okay.
All right. Good luck, guys.
Hi, can
Five,
people hear me?
four.
Hi everyone. Hi Padani,
Hi. Hi.
Anton.
Hi.
Okay. For again, one time again, I want to test Mr. Jundam speaker. Hello, Mr.
Yes,
Jundam.
can you hear me?
Yes. Yeah. We can hear you. Okay.
Great. And let me try sharing here. Just to be sure. Okay, so I'm not allowed to share at this
Wait.
moment.
Okay, wait.
Let's see.
Wait. Okay. It's done. Like start for the share screen.
Okay. Okay. Can you guys see? Is that okay? Okay. Oh, was that okay? You guys saw the slides? Okay. I guess that was okay.
Okay, maybe we will start in 7:05. Padani.
Okay.
Yeah, we can start now. Yeah. I think everything is okay. Yeah.
Okay, we will start now. Hello, everyone. Good evening, ladies and gentlemen. Welcome to the webinar of Vexanium with the title DeFi Day, The New Beginning. My name is Ayu and I'm your host today. It is my pleasure to welcome you to this webinar for the next 2 hours. And also, thank you so much for being here. Let me begin by giving you a warm welcome to the webinar. And welcome to all participants and also our speakers. This webinar is organized by Notes Community with the title Vexanium DeFi Day, The New Beginning on Saturday night, August 22nd, 2020. And we also say thank you for all analysts that already support us. That is Ngampus, our partner registration, and also for all media partners. For the next 2 hours, we will talk about decentralized finance. And this event will be divided into 2 segments. First, keynote speech, and the second is panel discussions. For first keynote is about why does DeFi now exist, and the second is could DeFi be ASEAN's new fintech. And the next panel discussion is talk about explore DeFi to unlock new potential. Our first keynote speaker, Mr. Jundam, will talk about why does DeFi now exist. He is a founding partner of Bitcasde. Maybe I will give you some profile of Mr. Jundam. Mr. Jundam is a founding partner of Bitcasde. He's helping to build decentralized financial DeFi infrastructure of the future, starting with an easy way to buy cryptos using LC's stablecoin. He created one of the first virtual crypto conference, 100 blockchain investor in 2017, and co-organized the World Crypto Economy Forum in 2018 in SF and headlined by Nick Szabo. He's been involved in crypto since mid-2012, holds an MBA from UC Irvine and BS from UC Berkeley. For Mr. Jundam, please take the mic now.
Thanks so much. Thanks so much for inviting me. Really appreciate it, and I'm glad things are going great for Vexanium, and really appreciate it. So yeah, I'm here to talk about why DeFi now. That's the title of the presentation. I'm going to share my screen here, and can everyone see the screen?
Yeah,
okay.
We can see the screen.
Yes.
Okay, thank you.
Yes, yes.
All right, great. So just a little bit about myself. I had already an intro. So founding part of Big Cash Stack, and I've done financial services for nearly a decade before my startup here in the blockchain crypto space. So I always had an interest in business, finance, economics, investments. And so I'm going to talk to you about, again, why DeFi. It's one of the hottest topics in crypto, and also share a little bit of a secret on banking that not a lot of people know, and then just really give an overview about DeFi and what's going on in the space. So, but I'd like to just kind of step back and just talk about, really briefly about the evolution of money and just give a little bit of history. We had barter thousands of years ago. It was inefficient, so gold became the preferred medium of exchange, and in different forms. And this shows metal coins, and gold and silver became money for a very long time based on its qualities, store of value, medium of exchange is very durable, divisible, and paper money was next. It was actually even more convenient. It wasn't as heavy, so it was more portable than gold. It was just as divisible. So we went into kind of the paper standard, especially here in the US, for example. And then credit cards became popular. So it wasn't so much that paper money changed, but there were different ways of sending and receiving. Credit cards became popular, and then we had more electronic versions of payment, which here in the US there's PayPal, and I'm sure there's others around the world. But with computers and the internet, it just became easier to send. But it was, the fundamental aspects of the money system didn't change. It was still based on, the paper money system. And the paper money system used to be tied to gold, but after 1971, Nixon got the US off the gold standard. So at least the US dollars, which is the dominant currency of the world, kind of got delinked from gold. And so that was a major change from gold to paper backed by gold. And then it was just paper. And then so the next evolution of money was in 2009 with Bitcoin. And Bitcoin was really a new money. It didn't necessarily just change the sending and receiving of money, but yet entirely new money. And that's what got everyone so excited. It was the first evolution since the 70s, you can say, and even before that, gold. We had a new money. And if you've been in this space for a while, you want to hodl tight your Bitcoin. And so this was amazing, entirely new money, just fully decentralized. No one had control, no government had control, no corporation had control of the money. It was peer-to-peer, and you could send it anywhere around the world at very low cost, and no one can freeze it, no one can control it. You didn't even have to go to a bank to send it, and everything was stored on your computer. That was another amazing thing about this technology. And now we have other cryptocurrencies, and I would say new forms of value. I say Bitcoin is still the money of the new money, but we have new forms of value you could send and receive from each other that represent different forms of value. Some may look more like shares of a company, others have different characteristics, but this was a entirely new field or new space in finance and the economy. And it's very natural for this kind of money. Everything is stored on your computer. It's not stored in a bank. The value is on your computer. That this was a natural fit for the internet economy, which has become more global. Talking to you here from San Francisco, and it's amazing, being able to talk to an audience in Indonesia and around the world. So we see videos around of people around the world, and now we can do business around the world with this new money, right? And another aspect about this new money is that it's programmable. Just like software, you can make it do different things. You can program a cryptocurrency coin to have the value of $1 or another currency like the rupiah. You can split it up into many different ways. You can create an escrow in it. You can program it. You can make it happen, make it do something when a certain event happens, right? And this is very powerful. And this is the foundation and the fundamentals of what allowed this, what we call DeFi space. But since we have a new money, it's natural that we can, and this technology that allows you to program it, that we have this next layer of finance. And we have a new money, so might as well have a new financial system based on this new money. And that's what we see today. It's a natural progression of fundamentally this new money. So that's why DeFi is so popular. It's just a very natural evolution. And so what made DeFi a trend just recently, right? And it's pretty much that, because we have this new financial foundation, our system. It's a new foundation. It's only natural. It's the next big thing. And so why is it so hot right now? Well, there's a lot of smart people. I call them kind of crypto nerds that like to experiment, automate things. Now it's software. You could do a lot of different things with it. And combined with speculation, because there's new money and new value in the system, and people are getting wealthy. A lot of people who've been in cryptocurrency from early on have this newfound wealth, and you combine it with a lot of smart people. A lot of people in the finance industry are coming into this space. People recognize the usefulness of a lot of these applications, and you just get a combination of people experimenting, smart people in finance and technology, new wealth coming into the space, and you get the momentum builds. And that's what you saw in 2017, even 2013 before that. And so it becomes kind of like a casino. You have a grand experiment in this new financial system, and it becomes a casino because people are able to create all these new projects that have potentially world-changing features that, and people are making money out of it, and that's what happens. So, it's exciting, and everyone's happy when we have this. In 2013, 2017, we saw big booms. But, for every 2013, you get a 2014. For every 2017, you have 2018. And so just, a caveat, we have 2021 probably, if we can guess and estimate that there's going to be another big boom, you'll have a 2022 that maybe not is so good. So, you could have some fun, but beware, be careful. There's a lot of great things happening, but unfortunately, there's also bubbles that happen as well. So, and that's what happened with ICOs and token sales in 2017. That was really the first DeFi boom, because you were able to invest and create a business, get people everywhere from around the world to invest in you, and you could provide application for everyone around the world. It was the first DeFi boom, though. Capital formation, investment. That was the very first DeFi boom, and I'll get into kind of the second DeFi boom that we're experiencing right now. But before that, I wanted to talk to you about a secret of banking that not a lot of people know about. So, so let's get back to the fundamentals. What are these innovations? Really, the secret of banking is that banks create money out of thin air. Most people don't know that, and governments, people have heard, create money out of thin air as well, but it's slightly different how they create money out of thin air. Banks create money out of thin air especially here in the US, when you build a home or real estate, you give a loan to someone, and when they build something of value, like a developer or a real estate developer builds something of value, you can create liquidity by loaning someone money on that real estate. So that's how banks create money. They just give it to someone and say, okay, hey, this is a new money backed by the collateral, which is a real estate. And so our money system is debt-based. You create a loan and you make an illiquid asset, which is a home, create liquidity in that by creating a loan backed by that real estate. And so really that's how our money system works. And banks have a monopoly, though, on this process to be able to create money through lending. And when you think about it, it actually works. It makes sense, because you actually have something of value. You're just creating liquidity from that value. Whenever you create more and more homes and real estate and other new value, you can do that. But banks really control the system right now. They're the only ones. There's a monopoly on banking. We can't do this, or a small startup can't just go ahead and do this. So it's really controlled by big corporations, and the government kind of also backs this whole system up as well. And that's pretty much the secret of banking, though. Not a lot of people know this. So, but when you apply that same idea to cryptocurrencies, you get you can kind of leverage these ideas, right? And you can make it work for the systems, like this entirely new system that we have, an entirely new financial infrastructure. So with crypto, it's the same thing. Just think of it as real estate. You have this value. Bitcoin goes from nothing, and then all of a sudden it's worth incredible amounts of value. And you could say, if I create a loan off of the value of that collateral, that Bitcoin or any kind of cryptocurrency, you can create anything that you want. In the US, you create dollars off of real estate. Now on the value of the Bitcoin, you can actually create dollars from the value of your cryptocurrencies. And so that's the secret of stablecoins and MakerDAO, synthetics. We at BitCash DAC, we do the same thing. We take cryptocurrency collateral. They use Ethereum collateral, create DAI, which is US dollar coins based off the Ethereum collateral. We use EOS collateral. We do the same thing, but the concept is very much the same. And I'd say the concept is actually taken from modern banking. Instead of real estate, we're using cryptocurrencies. And the power behind that is that you can create any kind of a synthetic currency that you want, or just a loan that you want that can circulate as a currency. So it could be rupiah, it could be euro, it could be yen, it could be a combination of those, because now you have programmatic money. You could split it up into many different, multiple ways, thousands of ways if you wanted. And it's just that you have the value of the collateral, and you can create any kinds of loans on it. So that becomes the tokens that circulate. And as long as the value of the collateral it backs these new synthetic or loans, your system works. And that's how we kind of, that's the innovation in I think a fundamental innovation in DeFi. And you can also, with the same crypto collateral, the value of the crypto collateral, you can create a synthetic token that's it has the value of an Apple stock or share of an Apple stock. It could be a barrel of oil. It could be an ounce or a bar of gold. You can also just create synthetic versions of other alternative cryptocurrencies using the same method. You just create a loan off of the value of your cryptocurrency, and voila, you have these new tokens that circulate as value. So that's what MakerDAO, I guess I mentioned already. Synthetics is another big one. Big Cash, that's us. And that's really the foundation. These stable coins that you see, they're the foundation of DeFi right now. You also have fiat-backed stable coins. They work a little bit differently from how I explained it. Tether and USDC are the largest fiat-backed stable coins, and they just really hold fiat or cash in a bank, and they create tokens from that, and they're always backed one for one. And so that actually is another good alternative, but you're still tied to the system. You're still tied to the traditional financial system. So I think there is a difference. There is risk there. You could get frozen out within the traditional financial system. Crypto-backed stablecoins, really, there's no counterparty when you have crypto-backed or crypto collateralized stablecoins. And from that, you have this DeFi industry space, which is, I think I looked at the top 100. These are probably most of all the DeFi projects that are in the top 100 in CoinGecko, or that's what I think I checked, and CoinMarketCap probably the same. So you have borrowing and lending. A lot of it is borrowing and lending DAI or USDC, as we mentioned before, fiat-backed or collateral or crypto-backed stablecoins. So we have AV, I think that's how you pronounce it. Compound. Celsius is a little bit more traditional. They let you take loans off of your crypto. But anyways, Compound and AV is allows you to borrow and lend. Yearn automates trading and borrowing and lending. Most of a lot of the sorry about that. Let me go back here. A lot of the projects are really exchanges. So you have Uniswap, 0x, different protocols or exchanges, decentralized exchanges. A lot of it is just trading tokens back and forth and speculation, because one of the biggest use cases for these stable coins like DAI is to borrow the DAI, or create DAI and borrow it, and then buy more Ethereum or some other token to speculate. So you could borrow and leverage your trading. So a lot of this, a lot of use cases for stablecoins are actually to just borrow it and then buy more of your cryptocurrency. So there's Uniswap, there's DYDX, which is margin trading, Kyber Network, 0x. They're all related to exchanges. Ren is you can do trades from Ethereum to other cryptocurrencies. So those are cross-chain applications. Chainlink is the Oracle. One thing you need is, I explained how you can create different types of loans off of your crypto collateral. You need to know the pricing, the kind of the external world's pricing of any particular asset. If you wanted, Apple stock prices or oil prices, just to to know what the cryptocurrency's value is compared to that, you need that. And that's what we call an oracle or price feed. So Chainlink, and there's other projects that provide that service. And then there's experimental projects like YAM was the most kind of popular one recently, where they tried to create this experimental currency similar to Ampleforth, which is kind of an automated stable token. And so there's another company, Reserve, Ampleforth, I think YAM are the ones that are trying to create some sort of stable coin that isn't collateral backed. It's just a stable token with different, I would say, tokenomics on how it works. So this is pretty much it. I think this is really DeFi how we see it today. There's all the companies listed here. I can probably go on. And if you take a step back and just take a look at what phases we have in DeFi, we really have money, venture capital investing. That was the whole ICO boom. We have exchange and trading. That's really what's the most active since the beginning. People are speculating, making a lot of money. So exchanging, trading different tokens are incredibly popular. Tokenization, as when you have these projects, they have their own native token, and so that whole process is was a huge innovation. So tokenization and ICOs was really the first boom, and then stablecoins most recently, a little bit of lending, but not the traditional type of lending. We're really in phase one. And then I see in the future phase two, which will be more of what we will see day to day, which is payments. Like people are going to be paying in crypto a lot more frequently, especially with the stable coins. Remittance, you're going to see that, foreign exchange, since we can now algorithmically create any kind of foreign currency. Accounting, insurance, lending, traditional aspects of finance, you'll start to see that's more, I think, mainstream. And so that's what I'm excited about, doing the having the commerce, having the payments become more and more prevalent in just the real world. So, but right now we're still in the speculative phase. We're doing a lot of experimentation, doing a lot of and right now it's still trading and investing in speculation at this point, in experimentation. But it's incredible what you can do already right now. You can raise money pretty easily, aside from a lot of the regulatory issues. You could raise money from people around the world. You could tokenize your project, so it's like creating shares of your project. It's similar to that. And then you have stable coins where you can pay in a currency that you're familiar with. So a lot of exciting things going on. So we have this new economy. I think we're transitioning away from the old traditional systems into the new, and that's what I'm excited about. And I think, for anybody that's out there just curious about what's going on, I think this is going to really be a whole new world in 5-10 years, where everyone's going to be using this new system just like everyone else uses the internet. So with that, I just want to kind of open it up for questions for anybody out there that has any questions. So, and I'm not sure how I am on time here. I think we're right about there. Someone can maybe help me out.
Okay, thank you, Mr. Jundam. Now we will switch to the next keynote speaker. Hello, Mr. Aaron.
Hello, hi everyone.
Yeah. Now, Mr. Aaron will talk about the explore DeFi to unlock
Okay, sure.
Yeah. Hello, Mr. Ranting.
Yep. So,
Yeah, he is Vice President of Access Blockchain Association of Malaysia. He is libertarian, crypto, and decentralized finance advocate. He will talk about could DeFi be ASEAN's new fintech? And now, please welcome Sir and take the mic first.
thanks very much, Ayu. Hi everyone. Ayu, can you help me share my screen? I don't have permission to do that.
Okay, wait.
Okay, I got it. It's gonna be on in a while. And let's see. Okay, so hi everyone. Selamat malam, and welcome to my presentation, which is could DeFi be ASEAN's new fintech? So that's a really interesting question that's posted by Vexanium, and I had a long think about it. In fact, I did some research and I learned a lot in the process as well. So first of all, I'd like to thank June for giving this session a start. It's really good that you went through the evolution of money and also the various kind of like trends and segments of DeFi. So my presentation is going to be a little bit on a higher level, meaning that I'm looking at from the point of view of the industry and how we actually fit within fintech. So I'd like to get started. It's a 30-minute presentation, so if I run over the time, let me know. Okay, so Southeast Asia or ASEAN is a really potential place, a high potential place, because we have a lot of unbanked. So we have 400 million of 600 million inhabitants without access to formal banking service. And we also seen a pickup in the amount of money being invested in fintech. So about 1.2 billion US dollars was invested last year, and about 51% goes to Singapore. But of course, the companies in Singapore, they operate out of Singapore, but in fact, they look to serve the entire Southeast Asian market. Now, DeFi has also grown quite rapidly since the end of Q1 in 2020. Now, I know a lot of projects got their start in 2019, but only very recent since Q1 and more in Q2 that we're really seeing the growth. So right now, as of today, we have about 7 billion US dollars locked up in U farming. And DeFi market cap for all the DeFi projects is about 12 billion US dollars. So that's relatively small if you compare with the entire crypto market cap, which is about 400 million. Okay, so so first off, I'd like to do a comparison between fintech and DeFi. So basically, fintech is centralized, is very traditional, it's a closed source. You need proper license and regulation, or if not, then you need to operate within a regulatory sandbox. That's normally provided by the central bank or the Securities Commission. And then you have international rules. So for example, this anti-terrorism, money laundering rules that you have to follow. And normally you use permission blockchain. Now, DeFi is the total opposite. It's the Wild Wild West. Is in the world of Bitcoin, Ethereum, and it's completely decentralized, completely open. It's quite experimental in a sense, and it also uses so-called decentralized governance, right? So I'll go more into that later. But they both share a similar goal, and that is to use technology to disrupt banking and finance to create value, and also to challenge the status quo. Okay, so now I've just decided to do this chart so that everyone can understand where we fit. So within the global banking and finance world, we have fintech, and within fintech, a certain portion of that is crypto. Now, there's a difference between centralized and decentralized crypto. So what I mean by that is, for example, we have centralized exchanges, and we also have centralized so-called OTC providers that also get involved in the lending and borrowing of cryptos. So what that means is that within crypto, there's actually a centralized industry, and DeFi is coming up, and DeFi is eating into some of the traditional crypto realms, such as a centralized exchange or OTC business. And why people would actually go for DeFi is because obvious benefits are it's trustless, it's open, it's transparent, but also at the same time it costs less. So that's something that's I feel important to point out, because before DeFi can come out and revolutionize like the entire world, it's going to revolutionize crypto first. And as of last count, I saw a poll that about only 1/3 of people who understands crypto, who deals with crypto like day in day out, actually understand about DeFi, and a lot of them are still learning. So here's the sectoral comparison between traditional so-called finance, which is where you have the central bank securities commission, they issue cash. Like June pointed out, the way countries and central banks manage cash in the economy, their currency exchange rate, all that is like it's like a little bit of a magic, right? So anyway, that's a little secret you shared. But then we have a lot of regulation. It's very traditional, and a lot of things have stayed the same even since we had the internet. Because when we have the internet revolution, a lot of the processes were just transferred right from paper into electronic form, but structurally there's no change. And there comes in fintech, right? And fintech seeks to sort of like be a little bit braver and more willing to try out new approaches, right? And the banks right now, in fact, central banks are quite supportive of that. So before, where they have to operate in a sort of a gray area, now they have something called like a regulatory sandbox to operate in. So we're seeing a lot more progress because of that as well. And then we have DeFi, which is in the realm of so-called crypto. And we have different ways of issuing money, and of course proof of work is from Bitcoin, but we also have proof of stake systems. We use crypto to transfer money, and so on. So fintech in ASEAN, why it's interesting is because of our growing population, GDP. In terms of regulatory hurdles, actually there is quite a good collaboration. We'll go into that later. Now, in a sense, Southeast Asia is a really small area if you look at the map of the world, right? But within Southeast Asia, with such a diverse cultures, right? Different countries, different languages, So that's something really interesting. So it is challenging, but it is a fast-growing area. And in order to succeed, collaboration is emphasized, and I think that's one thing that's been very good for us. So, for example, I'm the vice president of Access Blockchain Association. So we have a collaboration with ABI, Asosiasi Blockchain Indonesia, and also Access Blockchain Association in Singapore. So I really appreciate that, and that's something that I find quite special about our region. So the ASEAN, so we actually have something called ASEAN Regulatory Sandbox. So that means that countries like Vietnam, Thailand, Malaysia, Singapore, Brunei, Indonesia, all the countries have a sandbox under the central bank, but these central banks would work together, it's being coordinated by AFIN. And by doing this, we can learn from each other and progress. So that's why you see this actually a trend. For example, when Singapore issued the Payment Services Act, then you see Malaysia will come up with something like just 1 month after, and so on. So I think it's really good that we're collaborative, we're comparing notes. And the interesting point here is that 25% of projects accepted into sandboxes are somewhat crypto or blockchain related. So that's a really surprising find for me. So in terms of market size, Singapore is obviously the biggest, followed by Indonesia. Singapore has 29%, Indonesia has 17%, Malaysia has 11%, Thailand is roughly the same size. And in terms of like regulation status, we do have a different regulation. It's quite, I think it's still developing. I think the recent FATF travel rule actually pushed some of the regulators to implement, more things. So, for example, in Malaysia, we have a meeting with the Security Commission on in September, and the topic of the meeting is actually wallet regulation. So that's rather surprising because when we talk about wallets, we think of something like a MetaMask, something open source, and in fact, the wallet provider does not control any of the currency. But when the regulator comes in, they say like we want a regulation for like wallets, right? So what does it mean? Does it include like hardware wallets? So these are like the kind of things that we as an industry body are responsible to clarify, and we're responsible to help and assist the government so that they make the correct regulations. And we have within the fintech sector, so I'll just point out that the main sectors like digital payments, digital lending, enterprise tech, capital raising, crowdfunding, all that is so-called blockchain impacted sectors, right? So I'm not saying that the rest of it does not actually have impact, but definitely by far digital payments is ahead, far ahead of the other sectors. But these are the high potential blockchain sectors we should look at. And then the other interesting thing I found is that Singapore fintech companies actually use blockchain is sort of like the number 2 technology that they use when it comes to fintech. So that's super interesting as well. Okay, so now we go to DeFi. June has actually done quite a thorough so-called introduction of it. So I'm not going to go too deep at all. But the difference is that with DeFi, you own your own keys, and you're the sole custodian. You don't have to trust anyone. But of course, what that means is that the security is just transferred, right? So instead of trusting the bank, you have to trust yourself to keep it, right? And so I think when you say trustless, I mean, this word is also, in a way, it's kind of like, it's just referring to the system. You don't have to trust the system, but you have to trust yourself. So that's not a topic for another day. It's also open source. So that means that people can just take codes from other people and sort of develop on it. And that way development moves much faster. But what we're seeing is that there's like, almost like 2 segments, right? So you have one group that's always innovating, trying out new things, But what comes later, the second wave is where I think, we'll see a lot of so-called maturity in the system, meaning that some of the methods they use to develop software is not like, traditional software development. So I believe that once a certain concept is proven, then the more established software houses, they will actually look at it and they'll actually develop a solution that can be accepted. Because the one thing about DeFi that the challenge that you don't have with DeFi is that you don't have to know how things work in a bank. Whereas if you're fintech, you actually need to know very, very well, the kind of systems the central bank uses, commercial banks, and the stock exchange uses. So it's really different. So I can say that not everyone in DeFi can come into fintech and innovate, and but there's going to be crossovers between fintech and DeFi. So as you can see here, I just took this screenshot just like 2 hours ago. So right now we have a total of 6.59 billion locked. So all that is really positive. Okay, so as you can see here, we have a DeFi craze, right? So so there's like really 3 things that kickstarted the craze. Okay, so this from a report by CodeFi. So you have a tokenization of BTC and Ethereum. That's really interesting because, as you know, in the old days, all the big whales, what they would do is they'll just buy Bitcoin, they just keep it in a ledger, and that's it. They just keep it, hoping that one day, I don't know, it's 100K or something. But now is you don't have to, keep your Bitcoin idle. So you can actually utilize it. And the way you do that is you move it across the bridge onto Ethereum. So it becomes an Ethereum token. And by doing that, you have access to like financial services, right? So basically, it's you can lend out your BTC in return for some interest. And the second trend is actually started by the trend is the second factor is actually started by yield farming. So what does it mean? So it just means that when you lend money to people and when people borrow, there has to be an active market, right? And of course, the platform takes like a cut. But some of the tokens are really volatile. So, people don't really, it's not something that people really want to hold on to. So Compound started this pool called a bat pool, Brave token. So what they did is, so they're saying that, if you lend money, I would actually give you like another token, okay? And it's a governance token. And by earning that token, and because this token is traded, so this token actually has value. In other words, the simple way to put it is like, if you go to like BCA Bank, and BCA Bank says, okay, you deposit like, 10 million with me. And because you're depositing 10 million, I'm going to give you a share of the company. That's what I feel it represents, right? It's a share in, the protocol. So that's the other thing that kicked it off, because the yield started becoming crazy, because these rewards, they're actually traded. And when the price goes up, you end up with like crazy, like, interest rates, right? So that you farming, this particular term and concept is no longer new now. So you have a lot of like, so-called meme coins and all that, just copy the code, they just deploy it and so on. And also the third one is a security event. So when the so-called hacks happen, I would think that it's actually a negative thing. But in fact, the industry came together, and a lot of service providers start looking at it, and they start to see how they can add to the model. So I think we have to be thankful for this open source development environment that we're in. That's one of the reasons crypto is going so fast. And there's no easier way to measure the growth of DeFi other than the total value locked. So people would normally sort of how do you say, monitor the amount of Bitcoins and or Ethereum or stable coins that's being locked. So total value lock is the combination of all that. And these are the various platforms. Okay, so yeah, so why DeFi craze, right? So as I explained just now, it's yield farming puts idle asset to work, receiving rewards for liquidity. Yeah, so it's a really interesting concept. I think it's really taken on. Now you have to be very, very careful, because there's I'm not sure whether you guys heard of stuff like Yam, there's some meme coins out there. There's another coin called Based, but there's quite a lot of these so-called deflationary meme coins. That's yeah. So you have to be careful about that. But anyway, I won't go into that. Not for this session. All right, so these are DeFi categories. You can do fundraising, ICO, STO, IEO. You can do stable coins. It can be issued by the central bank, a stable coin, or it can be privately issued. And there's a number of ways you can issue that. Either you take a deposit and you issue the token like Tether, or you can take deposits of Ethereum and issue DAI, like what MakerDAO does. And you have open lending platform, open lending protocols. That's really interesting. So you have Aave, which allows flash loan. I won't get into that, but it's a really, really interesting concept. It's like almost like you're arbitraging like with a single transaction. And you have decentralized prediction markets like Augur. You have decentralized exchanges like Uniswap. You have decentralized derivatives like Synthetics or Level 01. And you also have decentralized insurance. How amazing is that, right? So you have all this technically are, these are all technically like companies, right? So that's the difference, I think, between like 2007 and now. Now you actually have serious companies that you can invest in. Okay, so there is a crossover between crypto and the real world. So you have crossover assets. So you can have so-called tokens representing a coin, which is a currency, or you can have a token representing a gold, right? 1 gram of gold. But you can also have like so-called, Bitcoin, but represented in the real world, like a Bitcoin ETF or Bitcoin futures. derivatives and so on. Okay, so this is just a really interesting so-called graph that I want to show you guys. It just shows the number of activity. So we were not able to get too much out of this, other than we know that Uniswap, Kyber, Bancor, MakerDAO, like, yeah, I mean, some of these posts are really popular, but if you have a snapshot over time, then you can see it's very interesting to see how it develops. Okay, now, so for the case study, I'd like to present Soramitsu. So I actually represent Soramitsu for Malaysia. So Soramitsu is a Japanese company started in 2017. The traditional fintech company, even though the founder was from a crypto background, they created Hyperledger Iroha, which is one of the frameworks under Hyperledger, and they established the Cambodian CBDC, Central Bank Digital Currency, as of last year. So it's been operation for a year, and it's going really well. And they also produce Polkadot. So in case you don't know, Polkadot is a blockchain that allows interconnectivity with other blockchains. So they have like a parachain and so on. So this Polkadot and Web3 Foundation commissioned Soramitsu to build the Polka swap, which is the official DEX of Polkadot. So if you are familiar with a DEX, like for example, Uniswap, you understand that right now it's very, very difficult to make a transaction because, I mean, you need to pay very high gas fees and it's very slow. So Polka swap is going to solve that. And more than that, because it's the official DEX of Polkadot, Polka swap will be able to bring assets from other blockchains onto Polka swap. Now, and Polka swap will be built on Sora, which is a decentralized crypto project, which surprisingly has its origin in Hyperledger. So it's a Hyperledger Iroha. It's actually based on Hyperledger Iroha, and the first version has something like, I believe, 2,000 transactions per second, and version 2, which is coming out soon, will have 20,000 transactions per second. So that's going to be really interesting. Okay, so this is the project Barcom, their CBDC project. So these are the kind of issues they try to solve. So it's they address the issue of interconnectivity, interoperability. So what that actually means is that instead of, for example, 30 e-wallet providers operating on their own system, the central bank will actually operate the system, and the wallet providers and the banks would open accounts with them, and their customer, and they will open sub accounts for the customer. So that way, the central bank has full visibility over the entire issuance of money and transfer of money, and that's really important now because as we get into the age of COVID, the new normal and stuff, things are a lot more volatile. And what it means is that governments will need real-time information to make decisions instead of waiting for monthly or quarterly reports. It's also more efficient. It also promotes financial inclusion, which I feel is a really big topic, especially in Southeast Asia, because we have so many people that, in fact, they're out of reach for the banks for geographical or whatever reason, and enables cash payment. So in Cambodia, it's a little bit special because the primary currency that people like to use is actually US dollar. So the Cambodian central bank wants to promote the use of their local currency. So so this is what it roughly looks like. So this is Barcom. It's a decentralized platform, peer-to-peer, but it does have a so-called permission, so-called role-based access, which means that based on and this is necessary, right? Because officer needs to be entrusted with the access to the system so that it make changes and so on. So yeah, so what I'd like to show you that is actually that this the merging between crypto and so-called the fintech world is actually quite close. That's what I like to point out. So then I have another case study, which is level 01. So I actually I'm managing the community for this project. So level 01 is a derivatives market, and the guys involved that started this, they're all traditional guys, right? So the thing they try to solve with this is actually they want to bring transparency, because the older centralized platforms, they weren't transparent. There was a lot of bad practices. So they use a hybrid system. So they use the AI engine to match the contracts buy and sell, okay, or and they deployed the contract on Ethereum so that it doesn't get changed, right? So anyway, it's gonna do an ICO. It did an ICO. It's gonna do a STO soon, and I believe the token model will be updated as well. So as you know, there's a new trend in this DeFi. So we're talking about things like bondage curve, which is something that's very, very smart, and it actually matches some of the practices that central banks around the world is using. So we start to see that in quite a number of projects. So that'll be something really exciting to see. Okay, so some people ask me like, hey, what's this DeFi hype? Is almost similar to ICO hype, and it is, right? Some of the coins, if you've been monitoring the market, they've been going up like crazy, like 50x, 100x. That's really normal at this time for some of the low cap coins. But what's different, right? What's different is that our ecosystem is more mature. We do have more developers. People are waking up to the fact that the old ICO model may not work. Okay, so they're looking at the so-called fairer distribution model. And nowadays, people actually need to have a product. Last time you raised money based on a piece of paper. Now you can't do that anymore. And not only that, so major VCs in OTC, they're forced or enticed to use the same platform as anybody else. So for example, yield farming, you don't have to be a VC, you can just be anyone, right? And you can get involved. So that's the other surprising trend that's happening. Now, the last point is really important because in the history of finance, I've been told that there's about 7,000 financial products. Now, a lot of these products we're not aware of. It's too complex. I'm not from a finance background, but these are some of the products that we see are the ideas that's taken off as gain adoption. But for every single one of those products, there's maybe like 10 or 100 of other products that didn't get adoption. So what's going to happen, I predict, in DeFi is that it offers a really low cost environment to experiment. So we're probably going to see a lot more innovation within DeFi, and it's just going to surprise everyone. In fact, one of the trend I've been told is that some of the crypto exchanges, they've been hiring people, but they're not hiring people from crypto. They're actually hiring people from traditional finance, right? And that's why I see like, these two worlds is just going to come and merge. Okay, we have challenges, right? I won't get too deep into technical terms, but basically some of the older so-called stablecoins, they have over collateralization. There's a risk of liquidation, and also liquidity centralization just means very simple, right? It just means that, for example, everybody knows all the DeFi projects, they're on Ethereum, right? Even though Ethereum is expensive, it's slow, why is everyone on there? And that has a lot to do with the kind of efficiency that DeFi needs. So for example, like flash loans, right? Ideally, you have to do it on a single blockchain, not only a single blockchain, but also when Ethereum moves into 2.0, you have to actually make sure that it's on the same shard, right? So the concept is like, it's like different cities. So you have many cities in Indonesia, and you have like Jakarta, which is like the financial center. So ideally, all the banks, they have a head office in Jakarta, right? Because that's where the liquidity is, and that's what finance needs, right? So so that's a really interesting theory, and that actually comes up one level to Polkadot. So when you have Polkadot, and Polkadot is going to connect to Ethereum and so many other blockchains, they have about 100 parachains, right? So when they connect, when you have that connectivity, like what's going to happen, right? So that's a really interesting question to think about. Some people think that some of the apps will actually migrate from Ethereum onto some other blockchain. And this is where Sora and Soramitsu comes in very interesting, because they're going to have PokerSwap. They're going to give fantastic, very attractive rewards for people to bring liquidity on to Sora and PokerSwap. And we're just going to see what happens. They're not the only one, but certainly going to be interesting to watch. Then your scalability. Like I said just now, with Ethereum, that is a problem. But now there's a lot of third generation kind of blockchains that are super fast, don't have the same problems. But then again, when you have technology, it doesn't mean that people will come to you. It's also about community, whether they're able to build that or not. That's a real challenge. Okay, so then we have a lack of asset standard. So in fact, I heard there's a project that's trying to standardize. The guy who invented ERC20, so he's trying to standardize like luxury goods, a standard for NFT in the luxury goods market. So that's something interesting, right? But clearly there's a need for standard, or else it's quite difficult to grow past that. And you have security risks as well. So Vitalik actually made a comment, which was quite true, right? So why do you want to use traditional finance, right? If you have a stable coin, US dollar stable coin, and this stable coin is like earning 5%, right? Whereas if you take US dollar and put it in a bank in Indonesia, maybe they give you like 3%. So the way Vitalik explained it is like that 2% may seem attractive, but that 2% is actually like a risk premium, because anything can go wrong with smart contract, and if something bad happens, then it's potentially you can lose your money. But anyway, the industry moves fast, so we actually have something called NXM, which is insurance. So you can buy insurance for your smart contract. So you see how everything is coming together. It's like a parallel world that we're building in DeFi. Super interesting, right? And you have actually transparency risk. So people would say like, or I used to say, transparency is really good, Well, it's good, but if people know what you're gonna do, because they can see your program, everything is open source, then they also know how to take advantage. And that's something that I did not take into consideration before, but it's something that's really real. So for example, if you're trading on Uniswap, like nowadays people will actually have bots watching the blockchain or watching Uniswap for any movement. And if you're placing an order, let's say a big order that's going to move the price up 5%, like someone can have a bot that can actually get ahead of you, pay a higher transaction fee, get ahead of you, and by the time you buy, that guy makes 5% right off the bat, right? So you get a lot of so-called very smart people creating very smart tools, and even though it's open and decentralized, I think every time we move into like a new territory, we have like a new set of challenges that we have to be aware of. And future trends, this is just my opinion. I think DeFi will continue to grow rapidly. Well, right now, mainly it's the people who knows about blockchain. Like I mentioned earlier, 1/3 knows a little bit about DeFi. But if you look at like the really active traders on DeFi, it's about only 1,000 people. If you look at the crypto groups, probably the DeFi projects have between 5,000 to 10,000 people. So these are like kind of like the people I feel is really in touch, but they're not enough, for DeFi to grow. Okay. And then the third point I like to make is the FATF travel rule. So what that means is that this international organization tells all the countries that, hey, look, in order to prevent like money laundering and terrorist activities, we actually have to, do KYC. So the rule right now is that if I'm an exchange and I have a customer and you're an exchange, and my customer sends money to your customer, right? I have to review my customer details, and you have to review your customer detail to me, right? So obviously exchanges don't like that, because they don't like revealing customer details, and even more, the customer doesn't like it at all. So right now, there's this entire thing is up for debate, right? So everyone knows like they have to do it, but no one knows exactly what to do. So there's several protocols that is being considered by some of these centralized exchanges. But in effect, what that does is that like traders like me, I don't really want the government to know what I'm doing, right? It's personal privacy, right? So that actually puts me off centralized exchange. So it's something that you have to be aware of. And some of the exchanges are actually going and saying like, we're not going to do AML KYC. So I think they're going to get in trouble, right? But the main point is that right now, because there's so many countries involved, they have to implement this or push them to implement. We have a bit of time for DeFi to grow. So DeFi probably has like 2 years. Don't quote me, but maybe 2, maybe 3 years. So so hopefully in that span of time, DeFi can really like fulfill its potential. So in 2 or 3 years time, when regulation is ready to come in, we already have so much stuff, right? So the other thing is passing fad, right? So there's a lot of coins that are, how do you say, like you have what do you call degen farmer, right? Like yam farming and all that. Anyway, once you get in, like it's quite funny, right? So yeah, there's basically projects that's copied off other projects that puts a meme and try to build a community around it. But people actually throw in money, and you'd be surprised, like yam, I believe. Only existed for like 2 days, and people put in a market cap. Well, the market cap was like 60 million US dollars. So I'm not sure how much real money went to it. So that coin went from like, what was it? Can't remember the price, but it went from like, the top all the way to like 60 cents or 40 cents. So be very, very careful. Be very, very careful, especially if unaudited smart contracts, or even if it's audited, like make sure like the audit firm is someone that's trustworthy. So I see this as like the first wave. I don't know. Just now June mentioned it was like this is already the second wave. So whatever is the next stage, I believe we're gonna see serious projects, right? That is familiar with banking and financial standards. Okay, these projects are gonna be the main beneficiaries. They're gonna be the ones that take all these ideas, right, and put it in a form that regulators can accept. Okay, so that's all. I have a Facebook group with 8.6K members, so do join. It's really open group. We can talk about anything. I have my LinkedIn here. I also have my Crypto Malaysia YouTube. And of course, yeah, I represent Access Malaysia, which is also partner Singapore Access, and also partners with Asosiasi Blockchain Indonesia. So thank you very much, everyone. Any questions, let me know. Yeah, thanks.
Okay, thank you, Mr. Aaron. Now, before we jump into panel discussion, there are some questions for Mr. Aaron and Mr. Jundam from participants. Maybe I will read first question for Mr. Jundam. What do you think about the sustainability of yield farming? And do you think the governance token that is given by yield farming process really valuable? And the second question is for all speaker, for Mr. Junem and Mr. Aaron. How can combine fiat and cryptocurrency used in DeFi, and how can make a system? Yeah.
Hi, I'll maybe Aaron, since he spoke about yield farming, can also chime in. But I'll the way yield farming works, as Aaron mentioned, they're kind of giving the shares of their project to people that participate, and I think that's why they're able to gain a lot of gain a lot of wealth by participating. I'm not sure fundamentally if it's the most efficient way for a project to grow. I think it does attract a lot of investors, which is good, and you need that, and it does draw a lot of capital. But I think for if you think of it as a business, you probably want to reserve a certain portion to actually develop the project, to improve on it, make it sustainable, and that's not necessarily only those that provide liquidity that's going to make that happen. So I do think that there's potential in some of the I guess strategies or some of the tokenomics around that, but I do think that it's probably overused right now, and there's probably a lot more thought that needs to be kind of designed into the system. So I don't remember the other ones, but maybe Aaron, if he wants to kind of also answer that question as well, since I know he's the one that talked about the yield farming.
Oh, hi. Yeah, hi. Can you repeat the question again?
For first question, what do you think about the sustainability of your farming? And do you think the government's token that is given by yield farming process really valuable? And the second, how can combine flat and cryptocurrency used in DeFi? How can make a system?
Okay. Well, yeah. First off, I think it's like liquidity. One thing the first thing is you have to understand that liquidity is something that is very fluid. Like for most of the pools, there's no lock-in, so that liquidity would go to the place with the highest yield. So my concern is actually there's too many of these protocols that offer like yield farming, so that liquidity moves. And the other thing you have to understand that this is a game where the guy with the most money would be able to generate the most, yield coins. So in effect, if there's any new protocols, depending on their distribution model, they'll just move in like a ton of money and get a bunch of coins, and they will control the market. So I think as it is, I don't think it's sustainable. I think it is a step in the right direction, but really, we really need to see, because there's two things of concern actually. Number one, I think is the platform that is built on. So for something like Ethereum is, you can build anything. I mean, the strength of Ethereum is you can build anything on it. But I sense that a platform where, it's more DeFi focused, payments focused, or just DeFi. I think that could probably grab some market share in the future. And the second thing is like the safety of these contracts, right? So that's the other portion that I think over time we develop like, more or less like a standard, or more or less like, Lego blocks that you can put together. So yeah, so that's what I think.
Okay, thank you for Mr. Aaron and Mr. Jindam for the answer. Now we jump into the panel discussion with the title Explore DeFi to Unlock New Potential. Now please welcome to our panelists, Mr. Denny Beskara as founder of Vexanium. And the second, Mr. Oham Dungio as a chairman of Indonesian Blockchain Association. And third, Mr. Anton Emil is a blockchain consultant of Blocksphere. And also our moderator, Mrs. Hilda Rizky. Please join Mrs. Hilda. And this panel discussion will be moderated by here.
All right. Is my voice clearly heard?
Yes. Hi, Hilda. Hi, Anton. Hi,
Yeah,
Padani.
sure. Hi. Hi, Mas Oham. Hi, Hilda.
Hey, everyone, hi.
Hi, Mas Dani.
Okay. All right. Thank you so much, Morita Ayu, for the seminar. And I will say good evening, all the speakers and all the participants that for joining this panel discussion tonight. And I am Hilda Rizky. I will be delivering this panel discussion for 45 minutes ahead about exploring DeFi to unlock new potential. So we have here right now 3 speakers sitting with us on the conference to be speaking about exploring DeFi to unlock new potential. Yes, we have Mr. Danny Baskara as a founder of Vexanium, and he was as well as a founder and CEO of eVoucher Indonesia company. How are you, Mr. Danny Baskara? Feeling good?
Hey, hello. Yeah.
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 And
Doing good. Yeah.
Good. I'm going to talk a little bit about Mr. Danny Baskara biography. Mr. Danny Baskara is a serial technopreneur with more than 13 years experience in tech and startup industry. He has several experiences building up 2 startups with 1 million and 11 million users in their previous ventures. And he also is one of the early e-commerce entrepreneur in Indonesia that create a flash deal site with 1.5 million users in 2010. And after several years in startup industry, he saw that blockchain is the next innovation after the internet and entered blockchain industry 5 years ago. Okay, welcome Mr. Danny Baskara. And the second one, we have also Mr. Oham Dungyo. How are you, Mr. Oham Dungyo?
Hi, I'm good.
Good.
Glad
Okay,
to be here.
Mr. Oham Dungyo is a chairman of Indonesian Blockchain Association, or in Bahasa we say Asosiasi Blockchain Indonesia. And he is one of the, I have one little story or biography about Mr. Oham Dungyo, very interesting, which is Mr. Oham Dungyo was an architect, right? Architect, you were an architect, right? And
Yeah, I was an architect.
Yeah, you left your profession, the architecture profession, once you have gone through the blockchain rabbit hole. Is that true?
That's correct.
That's very good. Yeah, and he left the previous profession to learn more about the revolutionary discovery, which is called blockchain. And ever since that happened, he's been selected as the chairman of the Indonesian Blockchain Association, or Asosiasi Blockchain Indonesia, for his humble contribution in introducing blockchain technology to the masses. And the next we have Mr. Anton Emil. How are you, Mr. Anton Emil?
I'm great. I'm doing fine. Thanks for inviting me in this event.
You're welcome. And Mr. Anton Emil is as a blockchain consultant of Blocksphere, whose duty is to apply blockchain technology towards enterprises. And the field that has become his dream is crypto economics and financial technology, or fintech. Okay, welcome all the speakers to the panel discussion. And well, I'm here just going to say in brief about the DeFi. DeFi has been very popularly internationally discussed and is believed to become a technology product that has intention of presenting open and transparent money service. Is that right? Okay.
Yes.
So the interesting
sure.
part of it is DeFi offers some superiority where institutions and individual can take its advantages to access broadly and broader the money application without needing the presence of the third party. Isn't it?
Yeah, sure.
Okay, good. So in this panel discussion, I have few questions that we are going to discuss about. And the first, this questions could be representing the curiosity in the people's heart about the DeFi, and also in the heart of all the participants here tonight. So the first question I'm going to give is, what do you think of the potential of the DeFi in 2020? Okay, I'm going to give this question to Mr. Danny Baskara. As we know that you have been developing blockchain technology and developing DeFi as well. So what do you think about it?
Yeah, so in perspective, right now is DeFi is still in early phase. Yeah, DeFi right now is happen in Ethereum blockchain. So we still not yet get a lot of attention, especially for people outside of crypto industry. Yeah, so in my perspective is the next potential is DeFi for me is when DeFi start enter another protocol. So more people can join and participate in DeFi ecosystem. Yeah, so that's why in Q3 we are focusing on build more application and on DeFi, and also make a lot of collaboration to enter DeFi space. Yeah. So yeah, because it just started, and in Vexanium we started focus in DeFi from last month. We are launching first DeFi called VexRX. So we start to educate people, especially in Indonesia, how they use DEP and DeFi. So we also teach them about a concept of DAO. Yeah, as we know that Indonesia is still new on blockchain industry. So now we try to educate them. And then this month, and next month, we will start to launch a new product called the Decentralized Stablecoin. Yeah, because we believe decentralized stablecoin is one of the first gateway of DeFi. So and second, some of our VPs, producer in Vexanium also now they are the project called Data Oracle. Yeah, because Data Oracle also is a gateway to blockchain to real world. So this is also the next big thing. I think DeFi is still need more adoption in other protocol besides Ethereum. So that is my personal opinion. Yeah.
All right. So what do you think? Do you have any target of how many people can join more to the DeFi? Mr. Danny Baskara?
Yeah. So I think right now is DeFi just started. So I think there is no target for people who know. Yeah, because I think it just started and only on the some of crypto people. So I think this it's still small. Yeah, the still only on the earlier and Ethereum community. So I think the next phase is still on how we educate new people to enter this space. Yeah, it's from my opinion.
So it's more towards the steps that how you can educate more people, maybe to more, get knowledge about the DeFi first. Okay, and now to Mr. Anton Emil. Mr. Anton Emil?
Yes.
Okay.
I think before I'm going to the DeFi potential in 2020, I must say that I think in 2020 the DeFi itself is really show the blockchain platform capability to perform all financial services. Unlike in 2017, which has Aaron highlighted before, in 2017 the ICO boom is only showcase the blockchain platform ability to perform one financial services, which we called by capital formation in the form of the token. So now that's the introduction between what's the difference about 2020 and 2017. Now I'm going to, I think the first potential of the DeFi is finally there's a way to solve financial inclusion problem. All financial instrument services that we know right now in the CeFi, such as money market, which consists of the lending and borrowing activities, and then there's a central exchange as well. Then derivatives, which we call by mutual funds, or in Indonesia we call it reksadana, and other financial instruments are only accessible by the people who have a bank account, right? So it's not fair for the unbanked people that cannot get those financial instruments as well. So with the existence of the DeFi itself, the unbanked people in the world, which approximately estimated around 1.7 billion people, right now can access the financial instrument as well, like the bank people. So in the context of the pure DeFi itself, the pure DeFi with no CeFi or regulator, with no DeFi or CeFi intermediary, actually we don't need the physical banking infrastructure to reach those unbanked people. So all the people in the world only need to have the internet connection, then the knowledge how to use blockchain wallet, and then they need to have some cryptocurrency, of course, to use the protocol, to use the DeFi protocol. And then the second potential that I think is will impact the financial system as well is finally there's an alternative to the CeFi, because in CeFi we see the case like some banks who mismanage the operational, and some asset management that doing wrong operational things. Maybe in banks we know as kasus Bank Senturi in 2008 gitu. And then the asset management, at this moment we know by asset management, by even BUMN, like it's owned by the country, has mismanagement in the operational that that case is actually make people lose the trust in the DeFi. So there's with the DeFi with the existence of the DeFi now. For example, if you want to use lending and borrowing activities in the DeFi, we use bank, right? So in the DeFi itself, now there's a lending protocol, which in the top right now there's an AVE and compound, and then if you in the CFI, if you want to invest in derivative products such as mutual funds, for example, or reksadana, we can use asset management service. Like there's many asset management in Indonesia, for example, maybe like Sinarmas, Core Invest, Bahana, and etc., where we can buy mutual funds from them. But but what happens if they mismanagement the operational? So there will be another case of the mismanagement asset management, as we see on the recent news right now, where the people cannot withdraw or sell their product because basically the asset management doesn't have the money to pay them back because it's misleading, using in the misleading way. So actually, meanwhile in the DeFi, you have the protocolized synthetics, which change the derivatives in a decentralized way. What meanwhile while you need to have the collateral, so you can issue uh, the the derivative products such as mutual funds or maybe such as futures options if you are a financial trader. So you can long and short in the market without the intermediary. And then I think the third potential use case is there will be an era of the new financial system, especially in the real world. If the real world asset can be tokenized as well. What I mean by the real world assets. So in the DeFi right now, it's actually pretty weird maybe for some people that use the DeFi protocol because they can only use the cryptocurrency as the collateral. Meanwhile, we are in Indonesia, when we want to borrow money from the bank, we actually give them like property certificate or even vehicle ownership document, which we call Indonesia as BPKB for the collateral. So maybe in the DeFi, it's pretty weird for some people that we need to buy cryptocurrency first so we can borrow money. When that happens, at the time, I think the DeFi boom will be much bigger than what happens right now, because with the real world asset that already blockchainized, actually they can use them as collateral to associate it with the external world. For example, the asset need to be associated with the external real world pricing, of course. Then we can borrow money from the form of stablecoin. That's it.
Okay, all right. Thank you, Mr. Anton Emil. Now from Mr. Oham Dungio, in your perspective, in your opinion, what do you think about the potential of the DeFi in this country?
Well, before I answer the question, I'd like to address that we need to actually see what kind of world we are living right now. We can see that as in the beginning of 2020, we are entering the new era, which everything from financial sector, including traditional or modern financial sector, is full of uncertainty because of the pandemic situation. So nothing is actually nothing can guarantee you that this is secure. But then on the other hand, I truly agree with what the previous speaker has stated, both Aaron and also Jundam and also Padani, that is decentralized finance is offering some sort of escape or new alternatives for, especially for those who have not access to the traditional finance So this could be also our safety net, just in case the situation on a global scale, because the pandemic is on a global scale, is going out of control. We have a system that is I will not say stable, but pro, immune to centralized attack, such as the current situation we are facing. Like we're actually living in a crisis. If you guys might not actual realize, this whole system and also the boom of DeFi might actually uh, um, started from the pandemic itself, because people are trying to create a system that is gonna um, not gonna crash because of a certain situation. Just like this is just an example. So the potential for me is enormous. In fact, it might be it's I agree with Aaron that this is the beginning of the DeFi boom. Well, because for a project to really take off wherever in the world, it must be supported by the regulation. And because it's still starting, it's still in the early stage of the development, the regulation is still not ready yet. In this case, in Indonesia, we as the only association in Indonesia, um, the discussion between ABI and the regulator is also are going to be conducted maybe in the next month or the following months, as we are seeing progress from the DeFi projects itself. Um, Also, the secondly, I think the potential will be on a global scale. It will help many countries that is we've seen on a crisis to maintain their financial the to maintain the transaction or the financial needs for their people. I think that's the potential of DeFi.
Okay, a little bit more question to Mr. Oham Donggio. How much sure are you about that DeFi can really maintain about the mono crisis or even the very bad situation like we are facing right now from the weird pandemics, Corona? What do you think?
Well, back to my first statement, I think nothing can guarantee, but
Mhm.
the more alternative we have, the more probability we will survive this pandemic. So I think having DeFi on board just add the more probability for us to survive this pandemic situation. So and in particular, since it's decentralized, so it's not gonna rely on a country or a single entity. So I think that might be good for to combat the pandemic situation.
Okay, all right. So we are moving to the next question. Question number 2. What sectors, what are the sectors that can be greatly affected by DeFi potential in the near future, in the coming years? From Mr. Anton, what do you think?
I think there will be many sectors that will be affected by the DeFi. For the first one, I think the bank sectors, of course. So in the CeFi right now, the banking are doing the function of custodian, lending, and borrowing activities of our money, right? So meanwhile, in the futures, I think bank will become the crypto custodian. And then what differentiate with the current CeFi financial system is they will provide the additional infrastructure for their customer. So that infrastructure is connected directly into the DeFi protocol itself, which have the lending and borrowing activities, such as the protocol, for example, like Compound or AVE, for example, and another DeFi protocol as well. Then I think another sector that will be affected is small, micro, medium enterprise or SMMEs in Indonesia, what we call sector UMKM. we agree in here that the DeFi is the open market. So all the world can join to give the financing process or pembiayaan to the SMMEs. So the SMMEs, those enterprise doesn't need to depend on the financing power of the lenders on the Indonesia, for example, of the one country. So if, for example, like if the small, micro, medium enterprises need to borrow much money that the lenders from Indonesia cannot provide it, then the investor from the abroad, like America or from the Europe, can provide the capital in order so the SMEs can borrow money from them. So I think the financing process will become more connected in the world, yeah, because of this DeFi. And then the last sectors, I think the taxation sectors. I think we all agree that the taxation is a pretty complicated process, yeah, especially in Indonesia. One of the classification on the DeFi is stablecoin. So I think the DeFi will extremely simplify the taxation process, because with the stablecoin, of course, all the entities will have the blockchain wallet. Our tax regulators only need to have the crypto wallet, and then the crypto wallet can be connected directly into the business for the taxation process. For example, right now, if I buy some chicken, for example, I buy the chicken in the KFC, I will be charged like 10% of value added tax, or Indonesia, we call it by PPN. So the PPN itself, the VAT itself, can be received directly into the tax regulator's wallet. And the KFC only receive the money of the product that they are selling. Instead of the current taxation system in the traditional, all the money of the product selling and the taxation will be received by the KFC first. Then the KFC will be stored that VAT or PPN into the tax regulators later process. So there is two process that we can simplify as one. That's from my point of view.
Okay, all right. Thank you so much, Mr. Anton. And what about Mr. Denny? What are the sectors that came in your mind will be greatly affected by DeFi potential?
Yeah, so from my perspective is actually we must see DeFi adoption in real world in the future, yeah, beside on crypto world. Yeah, so right now, what we do in DeFi right now is most of us is collateralized or crypto, yeah, example BTC, ETH, or PX, yeah, and get some dollar. And also doing some flash loan or any liquidity mining or whatsoever, yeah. But the next wave is how this decentralized can connect to the real world, like we collateralize our home or our other asset beside crypto and get some BTC or USD or IDR coin or something like that. So do in decentralized way. So I think this can make more adoption in DeFi itself. Connected to the data in the real world is the one of the key. So I think the next big thing is data oracle. Yeah, so data oracle is the key point here, because in data oracle we need to connect forex and also temperature, and also take a part of open banking model at the next wave. So that is my perception about the potential of near of the future of DeFi.
Yeah. Okay, and Mr. Oham, what sectors will be affected from your opinion?
I think I'm just gonna add a little bit from the explanation of Anton and Mr. Danny. I think one of the sectors that's also will be greatly affected by DeFi will be digital payments. Whereas we are seeing now the rise of digital payment, centralized digital payments in Indonesia. There are right now there are several enterprise that is currently aiming to be number one. But then at the end of the day, if we're seeing the payment will be on a global scale, right? As the Bank Indonesia has already mapped the future of payment, it is called SPI, sistem pembayaran Indonesia, or in English the payment system of Indonesia, which is the roadmap will be from 2020 till 2025, which then they will implement blockchain for payment and also transaction between the central banks. From what I see, if all of the central banks has come into one system, then all of the and we will have this big network of payment, and and in contradiction to central banks, the connection between central banks of the world will then make our payment system decentralized, and I think this will be the biggest payment network yet established by human, if this is happening. We can see, let's take an example. We have the QRIS already, right now. It's actually the very first phase of the SPI 2025, 2025. And then the next step, the final step will be these QR can be used by everyone in the world, not just Indonesians. So everyone who has smartphone and connection to the internet can make payment to everywhere in the world just by using single QR. So for example, I have a friend from China traveling here to Indonesia, and they want to make some payment. They can just scan the QRIS and then right from their WeChat Pay, and then they can make a payment from that. I think it's very interesting to see how we will make payments with the help of DeFi.
Okay, Mr. Oham, if you think that the transaction will be, transaction and payment sectors will be one of the thing that is greatly affected by DeFi potential, do you think that the old school payment system, like money cash, will be left behind, or it will be fully stopped, or what?
In this case, I believe whoever does that did not adapt to the current technology will be left behind. Not only the payment technology. We are entering the era of a very fast moving technological advancement. So every party that is not trying to evolve or at least trying to adapt will be left behind. That's the truth. But that is why we are seeing lots of startups that did not last even for 3 to 4 years, because they are not trying to innovate. So I think not only digital payments or everything that is not adapting to the current situation will be left behind.
Okay, thank you so much, Mr. Olham, Mr. Olham Dungyo. So we're going to the next question. Okay, first of all, I'm going just to notice about, as per Mr. Olham said before in the first question answer, he said that the regulation of the country is not ready yet to receive the new global system, which is called DeFi. So just a little bit notice, nowadays the government's knowledge is still on the stage of just knowing blockchain and crypto asset or cryptocurrency. So they have not known really well about the DeFi yet. And it will take time to learn for them about the DeFi. Okay, so this we're talking about the regulation. That one of the factors that prevents DeFi from unlocking its full potential maybe is the regulation. So what do you think about it, Mr. Oham?
I completely agree with that to some extent, because there are two types of entrepreneurs. The first one is the one who always comply with the regulation. The second one is the one who doesn't really care with the regulation. If you are the first type of entrepreneur, then you need to understand the current situation in especially in this case is in Indonesia. Currently in Indonesia, the regulation, I'm gonna just brief the current regulation that is connected to blockchain, crypto, or DeFi. So first regulation is by the Minister of Communication and Information, which is about electronic transaction and system operation licensing. It's regulation number 36 of 2014. This might be subjected if the DeFi or if the project has a website, which most likely will do, and also have transaction inside there. And then the second regulation that I will want to mention is the regulation number 77 by the OJK, or the Financial Services Authority of Indonesia, on information technology-based lending services. Actually, this regulation is expected to support the growth of projects as new financing alternatives for communities, which is, in my opinion, is really connected to the decentralized finance. In the regulation itself, the fintech, or it's so say peer-to-peer lending providers are classified as other financial services institution, which is non-banking institutional. So in this regulation number 77, it's in the form of sandbox. So in a timeline of a year, OJK will observe the providers, and in the time of observation, they need to apply for the regulation, which is not ready yet. And then the last but not least is for the crypto. I'm just gonna update a little bit about the regulation of crypto like Bitcoin and Ethereum in Indonesia. As of 2018, the Minister of Trade, under the regulation number 99, has categorized Bitcoin, Ethereum, or token just like Vexanium and other crypto assets as commodities. So just like gold, silver, palm oil, crypto assets can be legally traded in Indonesia, which is further regulated in BAPEPT, or Commodities and Future Trading Regulatory Agency, number 5 of 2019, which then regulates the technical aspects for the exchanges. Now, the question is for DeFi, the closest regulation that might touch DeFi business model is the POJK number 77 of 2016. As of now, if we don't, if we might create new regulation, maybe the correct regulators that we will talk to is probably OJK and Kominfo. And I think as the only association in Indonesia, it's our job to start the discussion with them and also educate them with this decentralized finance.
Okay. So, what do you think, Mr. Anton? Do you agree with this? Do you think, is there any way for the government to flexibly change the regulation, following the needs of the people globally nowadays?
I think before I'm not really 100% pro into the DeFi, because what just Mas Oham said is basically true. We need to agree in the perspective of the financial regulator that the main point is actually only one, that the regulator wants to make sure the safety of the investor money, right? So the investor not gonna lose the money. That's what we need to agree for. So before, maybe I first will state some problems that preventing the government regulation from accepting DeFi. Then I will give the solution to the problem. Okay, So the first problem in DeFi, the users are responsible to maintain their own wallet. So the safety of the private key, or what we call by seed phrase, is actually managed by the investor themselves. That's the first problem. So if there is a misuse operational of the wallet, then the money is gone, and the investor cannot ask the financial regulator for that. Maybe that's the first problem. And then the second problem is actually, wait, back to the first. Actually, that private key and private key management is not suitable for some generation, yeah, especially for the boomers generation, which is not tech savvy. And the second problem is actually, from the regulator perspective, is there is no such anti-money laundering procedures in the DeFi ecosystem. Because in the DeFi, we only need to connect our wallet, which is the wallet address format is alphanumeric. So there's no way to associate it, which address is associated with which person. That's the problem. So the regulators want to make sure that the money doesn't come from the money laundering activities, maybe such as selling drugs or selling body parts as jual ginjal like that. And then, so I think the most suitable solution for the financial regulation is a hybrid financial system between the CeFi and DeFi. So it's a hybrid, both mixed between them. The recent news in America is actually the regulator is allowing the banks in America to become the crypto custodian. It's the news just released one week ago, and then actually that news solved those two problems. The first problem is the safety of the wallet private key management. So which means the custodian will ensure the safety of the crypto wallets of their investor, right? They will hire the cybersecurity to protect the crypto wallet in case the hacker cannot hack it. And then it also solves the second problem, which is the custodian, of course, because it's semi-centralized. They will do the KYC process or anti-money laundering procedure first before allowing you to trade in the DeFi ecosystem, which I explained before that the centralized part, they will provide the infrastructure. Then the CeFi part is actually where the custodian will do the KYC procedures. For example, maybe I can use the cryptocurrency exchange, yeah, because they are the crypto custodian that maybe you are familiar with right now. If you're registering in the crypto exchanges such as Indodex, Toko Crypto, Rekeningku, Pintuluno, etc., and maybe Binance, actually they ask for your identity, right? Identity card and your selfie with your identity card. What they do is actually they use your identity to associate you with your wallet, crypto wallet. So we know that the crypto wallet, which is in the format alphanumeric, can be associated from Anton, for example. Then if I receive or give the balance into those wallet and I cash it out, the regulators can know if this money is legit from trading or I do the money laundering in the black market, for example. I think that's the CeFi part. Then the DeFi part is actually the custodian entity will provide infrastructure to the ecosystem, where after you pass the KYC process, then you can trade in the DeFi protocol. I think that hybrid financial system between CeFi and DeFi is the future implementation that will be accepted by our regulator and also regulators in the world before we going forward into the fully decentralized ecosystem.
Right.
That's what I think.
Okay, yeah, we understand, Mr. Anton. So now, Mr. Denny, from your perspective, as we see that the development of Indonesia's regulation today, Mr. Denny, are you there? Do you think
Yes.
that DeFi can run with the support? Do you think that DeFi can run with the support of the government, or even it can run before the government support? What do you think?
Yeah, so I think it's because DeFi right now is still very, very small, yeah, compared than other fintech. Yeah, so I think now is still long way if we talk about DeFi. Yeah, first, as Anton said before, yeah, at the first way, we must know that DeFi is most of them is all decentralized. So second is there's no custodian in DeFi. So some character is on DeFi is most of DeFi is DAO, decentralized autonomous organization. So everything is doing by smart contract. So there's no custodian there. So people must trust the smart contract itself. And that's, I think, still for us as the innovator, yeah, we believe that is still a long journey, yeah. As I think right now is DeFi is locking is quite huge, 6 billion in the world, yeah, total, but it's still small compared to other fintech or any traditional finance in the world. So I think it will still unregulated until DeFi can enter adoption. Yeah. So because right now is yeah, most of us on crypto community focus in DeFi like MakerDAO or any other compound and maybe a FinDAO next the DeFi loan of Vexanium. So they just enter collateration of crypto. So there's no touch of fiat itself. So I think if DeFi they can enter the real world, that can enter like if you collateralize crypto, you can get fiat money. So I think in that time there will be regulator will coming. So I think for now is things still way to go, still a long way to go, yeah, to the regulator, yeah. I think that is my perspective about DeFi. Yeah.
Okay. Regarding to Mr. Anton's statement before, Mr. Danny, that he said that there is no anti-money laundering system in the DeFi. So do you think there will be any chance for the regulation in this country to be changed following the DeFi?
Yeah, so my perspective is on the blockchain, yeah, everything is borderless. So you cannot the wallet itself cannot be tracked and KYC, yeah. But at the end of after they use DeFi product, they use CeFi, like withdraw from the crypto to the fiat money. So in this process, there will be KYC. But if only DeFi, yeah, because all the transaction is happening on chain, so it's very difficult. Yeah.
Mr. Danny, I'm not really hearing your voice.
Yeah. Okay.
I'm sorry.
Yeah. Hello. Okay. Yeah. So I think in my perspective is because DeFi most of transaction is doing on chain, yeah, on the blockchain. So we cannot do any KYC or something like that, except they are withdraw from the crypto to the fiat money. So I think the KYC itself it still can be happen on CeFi. So that's why we still need CeFi itself. Yeah. Okay. Okay. Yeah. Hello, Miss Hilda.
And then also about the regulation, is still looks like still being a very much obstacle about the DeFi, and also you know the thing that can really affect so many sectors in in this country, like banking sectors, small, micro, medium sectors, tax sectors, cryptocurrency, adoption to DeFi itself, and then transaction, and so many advantages actually that has been given by the DeFi that will greatly affect it in this country. And the last thing is that about the regulation from the government, that we are still having very long journey towards the achievement of the DeFi itself. So I think this is the end of our discussion tonight. And thank you very much for all the speakers, Mr. Danny Baskara, Mr. Anton Emil, and Mr. Oham Dungio. Thanks for all the presentation, for all the statements for tonight. And thank you so much for all the participants for joining this discussion. Thank you for everyone. Have a nice, great day. Have a nice weekend. And, bye. Thank you so much. Now I will hand over
Bye. Thank
this
you, everyone.
discussion towards the Master of Ceremony, Moritayu. Thank you.
Yeah, thank you, Mrs. Hilda. Well, this webinar is finished. Thank you for all participants, speakers, and also panelists. We will say thanks for all elements that support this event. It has been our pleasure to host this event. And for our participants, don't forget to fill our feedback link. I will share the screen first. And wish you all a pleasant day. I'm Morita Ayu. Have a nice weekend. Thank you.
Hey, thank you, everyone. Thank you for Vexanium for having us.
Thank you, everyone. Thank you, Oham.
Thank you, Pak Dani.
Thank you, everyone.
Thank you Mas Oham, thank you Mas Anton, thank you semuanya.
Sure. Thank you, Mas Oham. Thank you, Mas Dani. Thank you, Morita. Thank you, Hilda.